Hello and welcome to Grab Your Mug. My name is Salamelea. I'm the Human Resource Officer here at Ichiban Tax. Karibuni sana. Today I'm going to be having a conversation with Robert Waruiru, who's our tax partner, and we're going to be discussing the finance bill. So grab a hot one, come along. So let's begin by defining what is a finance bill and why is it important?
Okay, so the finance bill really sets out the revenue raising measures. You see, if you're looking at any budget cycle, there is usually the expenditure side. Even if you're doing your own budget at home, there's the expenditure side, what you're going to spend, and then how are you going to finance that? Okay. So the finance bill gives the revenue raising measures to fund the budget. That's the essence of the finance bill.
Okay.
Yeah.
And how does it differ? How does the finance bill differ from the budget statement?
Okay, so the budget statement, which is also known as the budget speech, is now what the CS National Treasury will present to Parliament as the government's proposals for both the expenditure and revenue raising measures. Now the difference between the finance bill and the budget speech or budget statement is that whereas the finance bill looks really at the revenue raising measures in terms of changes to law, the budget speech will also go a bit more into detail around the economics, the macro, if you like, how the economy has performed, what are the economic forecasts, and what the government expects. And that's the reason why the CS National Treasury comes to Parliament to give a statement to Parliament on the economic outturn expected for the year, and then the government expenditure, which is the budgeted expenditure, and then how you're going to finance it. And the financing could be either by way of raising taxes or borrowing or getting grants.
Okay, all right. The budget policy statement, do you call it BPS?
BPS.
That's BPS. Comes before the finance bill.
Correct.
All right, so what exactly does it communicate?
So the BPS, the budget policy statement, is essentially, it sort of gives a preview of what to expect in the budget statement. So it combines, and probably we should talk about the full budget cycle, because 1st July 2026, for example, we'll start the finance bill, we'll start the cycle for the next year's budget speech. Now, various departments, ministries come together, they come up with their budgets, and that's what is called sector working groups. So they say this is what we expect to spend for the coming year. So they come up with a budget, and then all that is consolidated by the sector working groups, and we come up with what is called a draft budget policy statement, draft BPS, which comes out in mid-February. Now that gives an idea of the expected expenditure and challenges, the economic forecasts, priorities of government, where they want to spend money, for example. And then come March 15th, we then have the budget policy statement now that is published. Okay. And that is what you're asking, what does it do? So it basically gives a preview of the priorities of government, the economic circumstances, and then leading to the finance bill. Yes. Okay.
All right. Very, very insightful. Now let's walk through the journey of the finance bill as it goes to Parliament. So we start with the first reading, and what is that? What is the process?
Okay. So currently, because the CS National Treasury is not a member of Parliament, those documents are tabled by the chairman of the Budget and Finance and National Planning Committee. Okay. Who is currently Kuria Kimani. So part of the budget documents that are tabled on 30th of April is the final budget policy statement, which is the BPS, the finance bill, which shows you the revenue raising measures and the estimates of expenditure. Okay. So those are the documents that go into that must be submitted by 30th of April. Each year under the Public Finance Management Act. Okay. So the finance bill is then laid before Parliament, and that is the first reading. So it's included in the order paper, and people know we now have a finance bill, and it becomes available to the public. Okay. So that's the first stage. Then at the first reading, there's no debate on that document. Okay. we then go to the next stage, which is the committee stage. So after the bill is laid before Parliament, we go into the committee stage, which is essentially the bill is given to the relevant committee, in this case Finance and National Planning, and the committee is told, go out and hear what the public has to say. That's a public participation in line with Article 118 of the Constitution. So you'll see a notice in the press saying the finance bill is out, it has proposed to change 1, 2, 3 laws. Please give your comments, and that's where now the public comes in with the memoranda and participating, and you'll hear the committee going round listening to various stakeholders. So once they listen to the stakeholders, they then come up with a report, because everybody will have given their views. You come up with a report as a committee and say, this is what we think, and that report is tabled in Parliament, and that's when now we go into the second reading. At the second reading of the bill, they are debating the report that has come from the committee. The members of Parliament are debating the report. And after they debate, they determine, do we proceed with this bill or not? If they say, let's proceed with the bill, then it goes into a committee of the whole house. Basically, the Parliament converts itself into a committee as a whole house. And that is where you go, you review the bill clause by clause. So if the finance bill has got, say, like in the past, it's got 84 clauses. You read each and every one of those 84 clauses, and members of Parliament are allowed to, or they are permitted with notice, to propose amendments to the bill or to a particular clause. So you vote on each clause by clause. And usually you'll see the Parliament asking, what is the impact of this clause? We think we should change it like this, like that. So once that is passed by the committee of the whole house, then they report to the Speaker that the whole House has reviewed the bill, and we've adopted the report of the whole House. Once that is done, the bill is read a third time, and then now that's when people vote. That's when members of Parliament vote whether to pass the bill or not. So once they vote and the bill is passed, a vellum is prepared by, vellum is a document that is signed by the President. It's prepared and it goes for signature by the President. Then it's taken to the President, he assents to it. Once he assents to it, it stops being the finance bill, it becomes the Finance Act, because it's been signed into law. That's the essence of the assent. It's been signed into law, and then it's published under the Constitution. It's supposed to be published within 7 days in the Kenya Gazette, and then it comes into force on the specified date.
All right. Let me go back to one of the processes in the participation stage. Can anyone go?
Anybody.
I can just walk in.
And you should. And you should. Be heard.
I thought you give it to someone to to run with it.
You can be heard.
I can walk in.
Yes.
Interesting. Okay. All right. Very interesting. So with reference to the medium-term strategy, what is your take on the upcoming bill adhering to the set framework?
So the medium-term revenue strategy is, I don't want to use the word strategy, but it's a plan by government how to essentially bolster tax revenues in this country. And usually it's a 3-year plan. So ours is 24-25 to 26-27. So it's covering the financial years 24-25, 25-26, 26-27. That's why it's a 3-year plan. And in that plan, if you look at the appendix, it's got an implementation matrix. And it says these are the proposals that we want to implement. So for example, it says we want to reduce the corporation tax rate from 30% to 28% by 2025. It says we want to reduce VAT from 16% to 15% and then to 14% this year. It says we need to review the POIE bands because we think that they're not progressive enough. So it basically sets out the plan of government in terms of addressing the tax revenue raising measures as well as administrative measures as well. And so that is the essence of the medium-term revenue strategy. Now, how are we doing? I think it's a mixed bag. Obviously, things like corporation tax has not come down to 28% as expected. VAT has not come down to 14% as expected. POIE has not been, the bands have not been expanded as expected. But to be fair, there have also been some changes. Things like pension, the taxation of pension has been streamlined. We've now gone from exempt contributions, exempt income of the pension, and then taxation of the pension withdrawals to now exempt contribution, exempt income, and exempt withdrawals, what we call exempt.
Okay.
So that's been one of the positive changes of the medium-term revenue strategy.
Okay.
Yeah.
Let me ask about it. Who comes up with this strategy?
So it's the National Treasury.
Okay.
But again, with the stakeholder input. You see Article 118 of the Constitution mandates public participation in all government activities. So there's also public participation in terms of developing the medium-term revenue strategy.
Okay. Another question. The medium term is a set, that was a what, 3-year
term.
Three-year term.
Yeah.
So it's set to 3 years.
3 years, yes.
Okay.
Yeah, so
All
short
right.
term.
Okay. Right. You've been in the tax space for quite some time. And from your experience, what key changes in revenue collection or approaches do you anticipate in this finance bill compared to the previous one?
Okay. So you make it sound like I've been in tax for a very long time.
You
But
have.
23 years now.
That's a long time.
So when you're looking at a finance bill just before a general election, typically the administration in power tends to be a bit conservative in the sense of let's not antagonize taxpayers.
Okay.
So you will generally not see very aggressive revenue measures. And if you compare, for example, what happened in 23, there were very aggressive revenue measures.
Yeah.
Taxes rose, we had new tax bans and so on. This year, because of the elections coming up, I don't expect that there will be very many changes. And we think that that is the case because if you look at the budget policy statement, the revenue raising proposals are not many. Actually, what government has proposed is to increase the funding for KRA to enhance its administrative power to collect taxes within the existing tax laws.
Okay.
So that looks to be their focus.
Okay.
And it also makes sense because if you think about it, Salame, we are at 30% for corporation tax, so it's unlikely that it will go any further. For POE, we are up to 35%, so it's unlikely, and that's before affordable housing and SHIF contributions. So it's unlikely that POE will go up. Excess duty, again, we had increases over the last 2-3 years. So again, it's unlikely it's going to go up. So this is the reason why the focus here will be, in my view, 2 things. Administrative reform for KRA, capacity enhancement, and probably customs duties, because that's an East African issue.
Okay.
Yes.
Okay. Right. What are the common misconceptions about the finance bill process?
Well, the first one is that it starts on 30th of April. No, it doesn't. It actually starts on 1st July when the various ministries and departments start coming up with their budgets, so that then you can figure out how much you need to spend and therefore how much you need to raise. So that's the first one. Okay. I think the other one is that we think that it is an easy thing, but there are a lot of interests to be managed. The government is looking at increasing revenues and therefore raising more taxes. Taxpayers, we are asking for a reduction in tax rates.
Yes.
So you've got to balance that. And then government is also saying we need to protect certain industries using physical tools or tax tools. So we'll increase, and a good example of that would be furniture, locally assembled furniture. So in the past, the government has increased excess duty on on imported furniture, so that then becomes slightly more expensive, and then local manufacturers are able to compete. So you've got all these competing priorities, and I really don't envy the CS National Treasury because balancing those interests is not the easiest thing.
Yes.
So I think we probably, from the outside, we think that it's an easy thing, but I don't think it is easy. And of course, for the CS, we are eagerly awaiting the review of the tax bands. Remember, they promised that they're going to revisit the tax bands so that anybody who earns less than 30,000 shillings is tax exempt. That's part of the stakeholder management and inclusion that we're talking about.
Okay, all right. In HR, we are really looking at that as there. But as we wrap up, what key message would you like taxpayers and businesses to take away regarding this finance bill process?
I think the key one is let us participate as taxpayers. It's important that we participate, let your voice be heard. It's important that you read the finance bill proposals, get to understand them, go for public hearings, be heard. That's number one. And I think the second one for me would be, let's hold our leaders to account, because we are paying these taxes. We must ensure that they use those taxes appropriately, and so that we are then incentivized to even pay the taxes. So hold your leaders to account.
Thank you for that very insightful conversation, for breaking the process down and the definitions of the terms. Very good definitions for us common people. Yes. And thank you for joining us, and we hope to see you next time. Kwaherini.